Well, today I will be solving a problem on final accounts under double account system. In our previous class, we have studied that under double account system, we prepare 4 accounts for finalization of accounts. The accounts are revenue account, net revenue account, capital account, and the general balance sheet. Revenue account is a account which is prepared in lieu of profit and loss account, and net revenue account is prepared in lieu of profit and loss appropriation account. The capital account is prepared in a columnar form with 3 columns on either side of the account. On the receipts side, the first column represents capital receipts at the end of the last financial year. The second column represents the capital receipts during the current financial year. And the last column, that's the third column, represents the total of the first column and the second column. Similarly, the first column on the expenditure side shows the capital expenditure incurred on each item at the end of the last financial year. The second column shows the current year. The third is the total of 1 and 2. Each of the sides of the account is totaled and is carried forward to the capital account on the appropriate sides. The last account which is prepared is the general balance sheet. This displays the balance of capital accounts on the appropriate sides, and along with this, the current assets and current liabilities are taken into consideration. So these are the 4 accounts that we are going to prepare, and this we have already discussed in the previous class. Now let us go through the question and identify which account the items will be taken and why. So let us go through the question first. From the following balances as on 31st March 2019, appearing in the ledger of Electric Light and Power Company Limited, you are required to prepare revenue account, net revenue account, capital account, and the general balance sheet. Now coming to the first item, the equity shares are taken in the capital account as this is said to be your receipt. This is how you are going to generate your funds. And remember, in double account system, we prepare the capital account with an intention to know how the funds are generated and how are these utilized in the fixed assets, because electricity companies are public sector utility companies, and their intention to prepare capital account is to show to the public as to how the capital is generated, that is the funds are generated in order to purchase or invest on the long-term assets of the business or of the public sector. So that is why we are taking the equity share in the capital account. Now coming to the debentures are also a source of fund, and this is taken into the capital account. Land and building. Lands on 31st March 2019. This is the land purchased or accumulated in the previous year. So this also will be taken in the capital account under expenditure column. Land purchased during the year is also taken in the capital account under expenditure column. Similarly, machinery is also a fixed asset which has been purchased in the last year, 31st March 2019, that is in the last year. So it is shown in the capital account. Machinery purchased in 2020 is the purchase of machinery during the current year. Hence, it is taken in capital account as it is a long-term investment. Mains including cost of laying as on 31st March 2019. This is also a long-term investment, so we show it on the expenditure side of the capital account. An amount spent on mains in the year 2020 is also shown in capital account as it is an investment in a long-term asset. Next item is sundry creditors. This is taken in the general balance sheet because it is a current asset. And as I told you earlier, a general balance sheet is prepared with the balances that are carried forward from the capital accounts, and current assets and current liabilities are taken in the general balance sheet. So that is why our current asset will appear in general balance sheet. Depreciation fund as well appears in general balance sheet. The next item is sundry debtors for current supplied. Your sundry debtors is said to be a current asset. As such, it appears in general balance sheet. Your balance of revenue account for the last year is to be carried forward to the current net revenue account. So this item will be taken in net revenue account. So this is the last year balance. So when you're preparing in the net revenue account, first we bring down the last year balance that is given in the problem, and then you bring down the current year balance of revenue account into the revenue account. The next item is the other debtors. Other debtors is nothing but your current asset. This appears in your general balance sheet. Your cash is also a current asset, hence it appears onto the asset side of the general balance sheet. Your stores on hand is said to be also a current asset, and it appears in the general balance sheet. I'm writing it as GBS because there is no much space to type for me. Cost of generating electricity. Now this is an expenditure. So this is a expense. So all expenses and incomes are to be taken into the P&L account. Here we are preparing revenue account in lieu of P&L account. So this is an expense, so we take it onto the debit side of the revenue account. RA, I'm terming it as RA because there is no enough space for type fully. Okay, cost of distribution, this is also an expense, so this is taken onto the debit side of revenue account. Similarly, revenues and rent, rates and taxes is also an expenditure, so it is taken onto the debit side of your revenue account. Management expenses also are taken in revenue account as it amounts to the expenditure. Depreciation is a charge on fixed assets, which we usually take it as a non-operating expense in the P&L account. So here also we charge or we take depreciation to the revenue account. Now we have sale of current. Sale of current means sale of power. So this sale of power amounts to revenue. This amounts to the income. So this is taken on to the credit side of my revenue account. Similarly, the rent on meters that is received by the electricity company from its customers amounts to an income. So it is taken onto the credit side of the revenue account. Now we have other item, interest on debentures. So this interest on debentures is a charge that is an appropriation out of the profits generated during the year. So in lieu of P&L appropriation account, we are preparing net revenue account. So we should take this in the net revenue account. So I'm giving it a short form, NRA. Similarly, dividends are also distributed out of the profits to the shareholders after paying the fixed charges. So this is also an appropriation of profits. So this is taken in the statement prepared in lieu of P&L appropriation account, that is your net revenue account. So this is the analysis of the items that are given in the problem, and we have allocated or we have identified in which account these items are to be taken and why. Now let's solve the problem. So coming to the solution, okay, so we are doing with the solution. I have already prepared the formats so that it is easier to uh, understand and finish it fast. So the name of the company is Electric Light and Power Company Limited as given in the question. So we have taken the name of the company. And next we are first going to prepare the revenue account for the year ending 31st March 2020, and we have already classified the items as to in which account or which area they will be taken, so we can easily prepare here. So first we are preparing the revenue account for the year ending 31st March 2020, because they have given the balances for 31st March 2019 and the expenditures for 2020 is also given. So we assume that the closing year is 31st March 2020. So we are preparing now the revenue account. So what are the items that come in revenue account? We have already taken in this particular problem. So we have already identified the items that are going to come in the revenue account. Remember, when you are preparing your revenue account, we are not taking any balances brought down. So purely you are going to prepare this looking into the items given in the problem, given in the question. Okay, so now let's start preparing the revenue account. So the debit side of the revenue account shows what does it show? Onto the debit side of the revenue account, we are going to have all expenditures, and onto the credit side, we are going to have the incomes. So first, let us take the incomes that we have taken. So it is by sale of current, we have so by sale of current. So how much is our sale of current? Our sale of current is 26,400. And next we have rent of meters. So rent of meters is 600. Okay, now we are finished with the incomes in your revenue account. Now we will take the expenditures that we have taken. So what were the expenditures that we have taken? First is the cost of generating. I think we don't have any items in revenue in this column. So if we take here, we have stock, we have cost of generating electricity. This is the first item that we are taking. So cost of electricity, cost of generating electricity, that amounts to 6,000. Next, the second item that we have is cost of distribution of electricity. So this amounts to rupees 1,200. Next item is the rent, rates and taxes. This amounts to 800. Then we have management expenses, which amounts to 2,400. Then we have depreciation. It amounts to 4,000. Which amounts to 4,000. And then I think this only this much we have to take here. So now we can go for balancing it, and we will get a balancing figure. So if you are going to balance this. So let's find the total of the credit column. So okay, so the total of your credit column, the credit side of your revenue account amounts to rupees 27,000. 26,400 plus 600 will give me 27,000. So I take the same total onto my debit side as well, and I get a balancing figure here, and this amount will be transferred to the net revenue account to balance carried down to net revenue account. So what is the difference? 27,000 minus 6,000 minus 1,200, 800, 2,400. The total of this, so 27 minus the total of this will give me 12,600. So this is my balancing figure which has to be carried to the net revenue account. So we are completed with the revenue account, and now we will start preparing the net revenue account. So how do we prepare the net revenue account? The net revenue account for the year ending 31st March 2020. Okay, so this is what we are going to calculate now. So my net revenue account. So what do we take in the net revenue account? As I told you, net revenue account is prepared in lieu of P&L appropriation account. So we are going to consider the appropriations. So first, when you are preparing a net revenue account, you are going to bring down the old balance given in the problem. So in the problem, we have balance of revenue account for March 2019. It is 5,700. So this balance has to be brought down. So I take it as by balance brought down. This is given in the problem. So how much we are having? 5,700. And after this, you have to bring down the second step in preparation of net revenues, bring down the current year revenue balance which you have taken. So by net revenue account during the year, by revenue account current year. Okay, so the current year balance is said to be 12,600. So I finish my credit side of my net revenue account. So now I have to appropriate these profits. So first I have to appropriate, if you look into the problem, we have only these two items, interest on debentures and dividends, are the two appropriations that we are making. So that we are going to do it now. So my revenue account is here. Let me go to my net revenue account. So here first is interest on debentures. So how much is my interest on debentures? It is 2,000. And now coming back, the second item that has to be appropriate is my dividends. My dividends are 4,000. Okay, so now so now I can, only these items are there that we have to take it as seen in the problem. So now let us try to balance the net revenue account. So usually if you are to gain profits, your credit side will be more than your debit side. So in this case also we have 12,600 and we have 5,700, that amounts to rupees 18,300. So 18,300, and this side we have only 6,000. So I take the same balance onto the debit side as well, and this is going to be my balancing figure. So 18,300 minus 6,000 will give me 13,300, and this is the balance that has to be carried to my general balance sheet. So it is to balance carried down to general balance sheet. So this has to be carried forward to the next level. Okay. So we have completed with revenue account, and then we have completed with net revenue account. And now the third step, we are going to prepare the capital account, or the other name for this is called as receipts and expenditure account on capital. So we are preparing this as on a specific date, that is 31st March 2020. As stated earlier, this account will carry 3 amount columns onto the debit side and 3 amount columns onto the credit side. So onto the debit side, your expenditures are debited, or to the capital account, the expenditures are debited and the receipts are credited. So first let us see what are the receipts that we have taken during the year. What are the receipts made during the year? So first, if you look into the problem, we have equity shares and debentures. These are the two forms or capital through which you have generated the funds. Okay, so we are going to take it as onto the receipt side by equity capital. So equity capital, how much we have? This is given only for 1 year. So we assume that during the year there was no additional issue of shares. So we take this as last year's balance. So it is 1,09,800. So in my total as so I take the same amount. Okay. And now coming to the next item, we have debentures. So the other form of capital what we have generated is debentures. Even debentures, they have given only one amount and they have not mentioned the year. So we assume that this debentures were issued in the last year and not for the current year. So I take it in the first column and the total column. So during the year, it was nil. Okay, so we are finished with the receipts during the year, and now we have to go for the expenditure during the year. So if you look into the question, we have 3 expenditures during the year. One is land, we have acquired last year and current year as well. We have machinery acquired last year and current year as well, and mains we have acquired last year as well and the current year as well. Is it clear? So now we will take this. This is basically how you have allocated your receipts, how you have generated funds in order to make investments to these items. So first item is to lands. So during the last year, the previous year, we have taken or we have acquired 30,000 worth land, and in the current year we have purchased only 1,000. So it amounts to 31,000. So the next fixed asset we have is to machinery. So to machinery. So how much we have? In the last year we have acquired 1,20,000 and in the current year we have 1,000. So we have 1,21,000 total machinery as at the end of 1920. And now coming to the third fixed asset, we have the mains. The mains are last year we had 40,000 and during the year we have 10,200. So the total in the total column that amounts to 50,200. So we are completed with the capital account. So now once we have completed with the items, now we are going to find the total. Remember, once you have taken with the items, we are not going to balance the accounts, both the debit side as well as the credit side. We only take the total of the total column. So you just make the total of these columns and retain as it is, and these amounts will be taken in the appropriate places in your general balance sheet. Okay, so we will just total up the expenditure and we will total up the receipts. So my total expenditure is 31,000, 1,21,000, and it is said to be 50,200. This amounts to 2 lakh 2,02,200. Okay, and the total of my credit side amounts to, I remember my capital account will not be balanced. We are going to take the sum total of both the sides. That's what we are going to do. So, and coming to my total assets, we are going to have 1,49,800. You can go for balancing it as well, but still this will be an easy way to understand and to carry forward. So the last account what you prepare is going to be your general balance sheet. So what items we are taking in general balance sheet? Our general balance sheet is going to have the balances of, as I told earlier, we will first bring down the balances from the capital accounts in the appropriate places, and then we are going to take the current assets and current liabilities as well. So first, let's bring down the balances of the two accounts. One is from your net revenue account, we have to bring down the balance, and next we have the balances of capital account or receipts and capital expenditure on capital account. These balances have to be taken in the appropriate places. Okay, so we have a total expenditure on your, this is the total amount spent on your fixed assets. So we are going to take first the total expenditure on fixed assets. So how much we have? 2,02,200. And the next item or next amount that we have to bring down is the total receipts. So total receipts is going to be your liability, because you have acquired the capital, we have generated the funds, and this has to be repaid. So this is going to be your total receipts that we have, and this is a liability for us. So this is going to be total receipts as per your capital accounts. Okay, so as per capital accounts, how much we have? We have 1,49,800. Okay, and now we have one more item that has to be brought down, and that is said to be liable to your shareholders, which is that amount, the profit which is remaining. So the balance carried down to GBR. So this will be taken onto the liability side directly. So it is 13,300. So we are going to take net revenue account. So these are the three things that you have to first consider when you are preparing your general balance sheet. Then you can get into your problem and try to bring all the items which are left out, that is your current assets and current liabilities. So how much is my net revenue? How much is my net revenue account? It is 12,300. It is 12,300. Okay, so this is my net revenue account. Now we look into the balance to the problem and to the ledger accounts whichever is given in the problem, and we consider only the assets and liabilities. So we have for sundry creditors, depreciation account, which has to be taken onto the debit side, that is onto the liability side of your general balance sheet. So only these two items are going to come here. So we are going to have sundry creditors. Sundry creditors. How much we have sundry creditors? We have 200. And then we have depreciation fund. Depreciation fund account. This is said to be 50,000. Okay. This is them. Now coming to your current assets. So we had only these two are the only items that account to current assets, and now we are going to take the current current liabilities. Now we are taking the current assets. Sundry debtors for current supplied. So we take this. This is a current asset. So we take it into the asset side of the general balance sheet. So we are taking sundry debtors for current supplied. So how much is the amount we have? It is 8,000. And the next item we have is other debtors. We have other debtors, then we have cash and stock on hand. There's only these three items are left out, which are to be taken into your general balance sheet. So we have other debtors, which amounts to 100 rupees. Next we have stores in hand, that amounts to 1,400, and the cash that we have, cash is said to be 600. So now we have taken all the amounts, so we are totaling the liability side and the asset side. Okay, so the total of the balance sheet, as we know that it has to tally. So 1,49,000, 12,300 plus 200 plus 50,000 will give me 2,12,300. Similarly, when I add on to my asset side, if I have taken the adjustments correctly, I need to get the total equivalent to my liability. So it is 2,02,200 plus 8,000 plus 100 plus 1,400 and plus 600. This amounts to 2,12,300. So with this, we complete the problem. So they had asked us to prepare revenue account, net revenue account, capital account, and general balance sheet. So students, this is the answer for the third unit, the third question which I have uploaded in the LMS content. Hope you have understood. Thank you.